management of M&M, which is addressing the media after the Q1 FY20 fund results performance.
And you will see continued results on that as we go quarter by quarter. Overall, consolidated profits are up 20%. This does exclude the impact of one-timers that we had last year in the profits, which was a gain on KG Mobility and a gain on the sale of Mahindra CIE shares. So excluding that, PAT from a consolidated standpoint is up 20%. ROE is at 19.4%. And as we look at the overall consolidated picture, revenue up 10%, profits are at 3,283 crores, as I said earlier, up 20%, excluding the one-time gain last year. The key drivers of our profits, auto and farm combined up 18% for the quarter. Beyond the market share gains, SUV capacity continues to increase. We have tripled capacity in the last 4 years. And that tripling of capacity now helps us in terms of being able to meet the backlog of demand and be more aggressive in the market as well. And despite being more aggressive in the market, we've been able to deliver a very strong margin performance. Tech Mahindra is up 23% off a lower base, and therefore we continue to maintain a high bar for the business to get back fully from a turnaround standpoint. Mahindra Finance is up 37% off a pretty strong base. And on the growth gems, where we've got a 5x challenge, they're again on a strong path, up 34% year over year. But more than profits in growth gems, what we look at is the underlying businesses and are they being set up for that 5x growth, because we're looking for long-term growth of that business, not short-term profit. So while it's up 34%, this is not a number that I look at very closely to say it should be up in high numbers. More important is the underlying businesses, and they're at this point doing very well. So let's focus a little deeper into each of these. Auto continues to be the number one SUV player. Volume is up 24%. We had talked about mid to high teen volume growth when we talked about F25 a few months ago. And in the first quarter, at least, we have exceeded that by growing 24%. Capacity I spoke about, and the margin expansion is 180 basis points. Again, a very healthy margin expansion on the auto front. Market share we spoke about, resulting profit is 1,330 crores from an auto standpoint, which is now inched ahead of the farm profit, which is 1,238 crores. And farm has seen some improvement in domestic outlook, but industry has been relatively flat. Hemant will share the details for the first quarter. And despite that, due to the market share gain, we've seen good progress in this business. International markets have moderated, but due to strong execution, margins gone up 100 basis points here, which again, in an industry like farm, is a pretty tough act, and a lot of kudos to the team to drive that margin expansion. Mahindra Finance, in addition to the asset quality and growth, technology is a key part of our turnaround, and we have 100% of branches now under a central processing system with a much better tech system. A lot of work has been done on technology. We aim to be the best in class in the industry, and we are well on our way. That's the remaining year and a half or so of turnaround that Mahindra Finance will undergo, is largely from a tech standpoint. And here you see almost 500 crores of profit for the quarter for Mahindra Finance. This is a pretty remarkable number. We're at 497 right now, just shy of that 500 crore number. Tech Mahindra, the new organization's focused on service delivery. The demand signals are still mixed. You see good numbers from a previous year comparison standpoint, but again, to be very transparent, previous year was a low point, and therefore we look more at are we on track with the turnaround plan as compared to the numbers of the previous year. Logistics is on a better track now, though not completely out of the woods as yet. It's executing far better, and the express business now, despite showing losses this quarter, is on a very good track. And as committed by the management team there, we expect that business to turn around by the end of the current quarter that we are in. Revenue is up 10%, but EBITDA has been hit by the express business and therefore is down as compared to the previous year.